Welcome to another edition of Making Sense Digital Dove. Zachary Moneybags, Greenberg, and Rafi, the real estate guy, joining us. Today, we're going to talk about a whole new area of investing that is out there to the public, which is real estate investing, and something that did not used to be available to your average consumer, but now is. So, Rafi, tell us about a little bit about what you do and what's out there, and what are some of the options for people.
Sure. So first of all, Dov, Zach, thank you for having me. This is it's exciting for me, one, to be able to expand my base of getting my platform out there and to educate your audience on the benefits of investing in real estate. It's something I found out 2 years ago when I was finishing up college, started reading real estate books. Actually started with Rich Dad Poor Dad. If you guys haven't read it,
Oh, I love that book. Yeah, that book changed my life.
it changed mine too, and it was an eye opener to say, again, it's not just about how much money you're making, because if you're making $1 million but you're spending $1 million, you're still stuck with zero. Make $1 million, spend less, take the remaining balance and put it into something like an asset, like real estate, stock market, whatever it be. I'm a big proponent of real estate for more benefits than just the cash flow, which we're not going to get into today, but there's a lot of benefits, tax benefits, appreciation, depreciation expenses. You can take a lot of write-offs. So, on that note, there's just a lot of benefits to it. And more specifically, what I found after doing a lot of research into the single family space and small multifamily, I realized that actually the larger deals, not necessarily just looking at a massive 600 unit deal, but looking at a deal that had scale to it, right? It made a lot of sense to pool money with investors. And
Making sense. Sorry.
Making
sense.
Uh-huh.
Taking a larger deal and taking it down with a group of investors rather than trying to do it yourself.
All right, let's take a step back. So basically, up until now, our show has been about people investing in the stock market, utilizing things that were not available prior to, I would say, about 3-4 years ago, or at least not available on a large scale, and now
Right.
almost anybody can do. Are you saying that the real estate market offers a similar kind of experience for people who have absolutely zero knowledge of this prior? People who have, are not part of a large conglomerate or a large company can now go start investing in real estate. Is that what you're saying?
Yeah, so there's a few different routes you can take. You can choose one to, you can go buy a single family home yourself, right? Let's say you find a house for $100,000. You don't need the full 100,000, right? You only need a down payment of, let's say, 25 to 30%. If you're buying it and you're going to plan to live in it for a year, that's a whole different story. You could put even down less, 3.5%, right? So you could get into a piece of real estate for much less than people traditionally think you need to. You need to. They walk by this massive building thing thinking, that's not for me, that's for someone else. No, but you can. However, instead of going, if you say, I'm Dove, I'm Zach, I want to go after something larger, you're not shut out just because your capital runs out. Go and bring on your friends and family and say, hey guys, I found a great deal. Put together $25,000 here, $50,000 there. Before you know it, you've raised, let's say, $300,000. That $300,000 can now be leveraged for an asset 4 times that amount, because a bank will give you 75% of the value of that asset. So you got to bring that last quarter, right? You only got to bring 25%. So you bring $300,000, you can now buy an asset for 1.2 million.
So this is really just a whole different kind of experience than, I'm going to go into this app on Robinhood and link it to my bank account, and bam, start pressing buttons, which I literally have no idea what I'm doing. And Zach will talk
Doesn't
about that another time.
Doesn't Zillow like kind of make it easy to buy real estate, or use some other kind of platform?
Right. Are there any other kind of platforms that provide the end user with a similar kind of making like Robinhood experience, but in real estate?
Yes, I mean there are these crowdfunding platforms like Fundrise.
Oh, I use Fundrise.
Yeah, Fundrise, you can put money in. The intricacies behind it, I don't know much about, but I'm talking about private real estate investments where, say, I bring you guys a deal. I'm going to go out to you guys. I'm going to go to my family and friends, and even outside investors. Again, there are a lot of legalities that you need to be following with the SEC. Raising money can raise a lot of red flags. You can't just go out and blast your deal out. There's different types of real estate syndications. That's the term, real estate syndication, joint ventures. You got to be careful with how you're raising money. You got to speak to.
Is it better to do it on your own, or you think it's good to do a joint one? That way, like, you get bigger.
It depends on your goals. If your goals are to buy a bunch of single family, then if you want to save up, buy a deal, save up again, buy another deal, it'll take much longer, but you'll have 100% control, as opposed to you can scale much quicker, get your friends and family involved, and everyone's going to win. Assuming you guys run the numbers correctly, everyone's going to win, and you can scale much quicker, right? It's easier. It's also much easier to replace a roof that's over 100 units than to replace one roof of one house, one roof of another house. It's just the economies of scale on a larger deal makes sense, but it comes down to your goals of what you're trying to accomplish. If you want to do
is this something that your average user needs to be careful with, in that you can't just go and say to, a bunch of your friends, hey, give me this money, give me that money, and, you turn around and you have a couple $100,000 in the bank and all. I'm sure there are like legal ramifications to these kinds of things, as well as like setting them up in such a way to protect everyone. Is that correct?
Yes. So in a case where you're raising money, it's called a real estate syndication. There's two sides to the syndication, which I think we'll clarify a lot. There's the general partnership, otherwise known as the GP, and there's a limited partnership, the LP. So the GP LP structure will generally look something like this. I bring a deal and I say to you guys, I'm the GP on the deal. I put together the deal. I found the deal. I negotiated the contract, got under contract. We need $500,000 to close. I'll go out to my network and I'll say, hey guys, I need $500,000.
Is there like a deadline to get this 500,000?
Yeah, ideally you want to raise them. First of all, you want to, before you go after deals of a certain size, you want to know you have the money to close, right? I'm not gonna go after a $50 million deal needing $10 million to close if I don't have that network of capital around me. If I go and try to speak to family and friends, how much are you willing to invest? And I learn I can raise $1 million, I can now buy a deal for $4 million, let's say, right? Doesn't mean a dollar amount should stop you. If a deal is a good enough deal and you make connections, you could probably find the sources. But again, you want to have a good understanding of, if I could get soft commitments of $1 million, you want to assume about half of them will stop and back off when you ask them to wire the money, right?
Yeah.
When it comes down to wiring a $50,000 check, a lot of people will be like, oh, you know what, maybe next time.
Maybe next time.
Yeah,
but how do you get to first base? Like, that's what I don't get. Like, again, with the stock market, I opened an app and click, 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 boom, I was there. This sounds like something you really have to be doing a lot of research on. You really have to be setting yourself up before you're at the step of going to somebody and ask them to write you a $50,000 check.
Right. So you got to be educating yourself. You don't want to be asking people for money before you understand the basis of it. And if you can explain it to someone who knows it, right? If you go to a random guy who doesn't know what he's talking about, you're going to sound like a genius. If you go to the guy who's been doing real estate for 25 years, the investor who's completed hundreds of transactions, and you can explain it to him and he's comfortable, imagine he says, I like your deal, let's partner on it. Now there's credibility to it, right? That's how you can get in on the general partnership and that ownership side as a beginner. Now, as a limited partner, as just a capital investor, the limited partner, that word limited is literal. You are limited to just your investment. You're limited to just your investment. You can't lose more than your investment. Yes, there's risk involved. If someone's saying, Dov, I guarantee you a 10% return on your money, I'd run away from him.
Right.
If I'm guaranteeing you money, it's probably a Ponzi scheme, right?
But
if I say, here are the projections of the deal, I project I can get you an 8% return this year. In 2 years, we're going to raise the value of the deal because we're going to raise rents. We're going to decrease expenses because previous management was very inefficient, right? They didn't have an in-house property manager, whatever it could be. They could find a lot of ways to lower the expenses, and the value of real estate is based on the NOI divided by the market cap rate.
Okay, time out. Please translate what you just said.
I knew I was going to lose you guys there. NOI is the income minus the expenses on the property. You're left with the net operating income.
So we're making $12,000 in rent, and it cost us $6,000 to run the property. Okay, so that's okay.
That's $6,000 of NOI.
Okay.
You have it divided by the market cap rate. The market capitalization rate means what yield you can expect to receive for that property in that market. So, for example, is
that just rent, or that's not rent?
No, that's like if you bought the property all cash. If let's say you paid $1 million all cash, what yield would you expect to receive? So if you get a property at a 7 cap, if someone referred to as a 7 cap, that would be a 7% return on that $1 million. If someone says you're going to get a deal at a 5 cap, it means you're getting a 5% return. So the lower the cap rate.
What is the return? The rents you're collecting, or when you sell it, you make that much money?
No, you make cash flow monthly. So based on how efficiently you run the property, right, and what type of deal you get, because what price you pay will determine how much money you have to put in the deal. That'll all translate to your returns, right? If you overpay for a property that could have made you 7% return, but you overpaid, you might only get a 4% return.
I mean, I think one of the most famous properties of all time, which originally was bought for, I think at the time, the record of square footage was 666 Park Avenue, right? That one. got bought. It was the one of the most expensive per square foot real estate transactions in history, I think, in Manhattan. And then they
Right.
ended up selling it for at a tremendous loss, I think, right? So you could theoretically lose here in real estate. It's not saying that investing in real estate is a win.
I'm just
Always.
I was just confused what the cash flow is. Like what money are you getting just for holding it? Like I don't get it.
Cash flow is you have your revenue, right? You have your rents. You have maybe have a parking garage that you rent
Right.
out to the tenants. All that rent minus all the expenses
Right.
to operate. You have your taxes, insurance, utilities,
Right.
property managers, all that. Whatever you're left with,
Isn't
that's
that just profit?
it's profit. But then you have, let's say, your profit, but let's say you have a mortgage on the property. You take your profit minus all your mortgage payments for the year. That's your cash flow.
Okay.
That cash flow divided by your initial investment. If you have
Right.
cash flow $10,000 and you only invested $100,000, you have a 10% return on your money.
Right.
So
Okay,
in
now I got it.
in your estimation, is real estate really the place to invest and make money? I mean, it's like everything else. It's a cyclical business. You know, we see what happened in Manhattan over COVID, where all these, how many empty office buildings are there right now? And not only that, how many businesses that relied on those office buildings have gone out of business? So is real estate the business to be in because it will always come back, or potentially not?
So yes, in my opinion, because of besides for the cash flow, correct. It's cyclical like any other business, as well as the fact that if you buy a property in a bad location and it sits vacant, it's not a great investment, right? It's sitting vacant.
But I have an office building on Fifth Avenue that was full for 40 years, and then the coronavirus came and everybody's working from home, right?
Right.
So
You got to have downside protection. If someone is over leveraged, meaning they took out a loan for 80% of the purchase price and they only have 20% equity in the property, and that property drops 30% in value, they're in trouble. So, but if someone says, I'm going to buy a building, I'm going to put down 40% on it, and the value of the building goes down 20%, they're still protected because they still have that spread, right? On top, but besides for that, the benefits to the real estate outweigh so many other things. Besides for the cash flow you receive, there are tax benefits. The government incentivizes property owners to own real estate, right? In a case of an apartment building, you're providing housing to people, right? You're providing housing, so the government's going to give you a lot of tax benefits, write-offs, where you could depreciate the physical asset. An asset, that is tangible, has a life, even though the property may last 100 years, and 200 years, 300 years, they're still going to say there's a certain lifetime to it, right?
right.
And the government looks at that at a 27.5 year basis. So for example, if you took a building, I'm going to pull out my calculator, you buy a building for $1 million, each year that government's going to let you write off part of that expense. You have $1 million, right?
Right.
Divide that by 27.5. Each year, you could off-write $36,000.
And that money comes right off of the money that you owe in taxes, right? Or no?
Correct. So if you, yeah. So again, speak to an accountant, speak to an attorney about all this. This is just a very high level. If your property made $50,000 of cash flow, you can now
write off $36,000 of that, so you only made $14,000. Look at me with the math.
It looks very good. It looks like you made only 14,000, but really,
you made 50. I got
still made. That's not a real
whatever.
expense you're paying.
It's not
That's
a
not a real
real
expense you're paying.
Okay, so it sounds like real estate is while very different than investing in the stock market as a consumer, it does sound like something that with, enough work and a little bit of networking potentially could be something that is both very valuable and also in a long term very, very a way for people to make a lot of money, and also rich dad, poor dad have real assets.
Wait, Rafi, can I ask? I think Dov was asking this before, but you as you're a young guy like me, we just graduated college. How did you get to learn all this information about real estate, and what makes you feel confident that you could pull off some sort of deal already at such a young age? Like where did, I'm not denying your credibility. I'm saying, what tools did you learn? Like how did you find the research to be able to do this?
I think the age we're at right now is a perfect age. Again, depending on what your life situation is like, now's a chance to take a chance, right? Because life only gets more expensive. You have more responsibilities. Now's a chance to take your chance. And through college and just being motivated by something, right? Like, you're a runner, Zach, right? If you're passionate about something, you're going to spend a lot of time doing it. You're going to spend a lot of time learning what's going to make me better, what's not good for me. Same thing, real estate. what makes a deal good? What makes a deal not good? What should I look for in a deal? What should I, if I'm in this market, how do the taxes, play out? A lot of things to look at, and just learning from anyone who's in that space. Speaking to people, most people in a space that's very entrepreneurial, like real estate, where there's risk involved, which there is risk. Everyone likes to help everyone out for the most part. There's a few people who are a little bit, self-centered, but for the most part, everyone wants to help. So ask around. Same thing. If you want to become a doctor, go ask a doctor, how did you get through 10 years of school? Like, people want to help. Just go out and ask people, and they're gonna answer your questions. And if you don't get an answer you like, go ask someone else. So do I have the confidence to take down a deal? I like to think I do. I've invested passively in deals. Now I'm starting to venture into doing deals actively, right? But am I
where you're saying they're your deals? You're putting them together. You're finding the properties. You're going out there raising the money for them and things like that.
Correct. Yeah. Me. And then again, when you first start buying properties, you don't have the balance sheet per se to qualify for a loan. Banks want to see certain net worth and liquidity thresholds, and if you don't have that, it shouldn't stop you. Go find a partner who does, and say, listen, if I bring you a deal, I'll take a percentage of the equity. You might not get 100% of the equity, but I'd rather have 30% of a great deal, a large deal, as opposed to
0% of no deal,
or even 100% of a really bad deal for just because I can afford it, right?
Right.
And it gives you better credibility down the road, right?
You do 1 or 2 deals with a partnership of people who have done this for 20 years, and let's say you cash out your investor of their money in 2 years, 3 years, and it's a home run deal. Guess what? They're gonna want to put more money in with you. They tell their friends. And before they have a network, right? But reputation is everything. You screw people up. You screw around with people's money. You have a big responsibility. You're not just getting rich off their money. Your investors have to come first. Your investors need to be the ones who are the focus. They receive the majority of the cash flows. They receive the majority before you even get a piece. Once you hit a certain threshold, depending on how the deal's set up, then you start to enjoy the cash flow, the benefits. Because they're the ones who put in all the money, majority of the money.
Got it. Wow, that's pretty interesting. All right, this is the end of show number 1 about real estate. A very, very broad-based overview. Rafi, the real estate guy, Digital Dove, Zachary Moneybags, Greenberg, and we'll see you all at the next show. Bye-bye.